Hello and welcome back, guys, to the channel. And today, guys, it's gonna be an exclusive one, right? I know it's been a while, but it is what it is. Actually, on today's video, guys, we are basically gonna be doing an in-depth overview and breakdown of the actual MMC footprint strategy in its whole depth. Now, before I get into it, guys, make sure you like, subscribe if you haven't, and of course turn that bell button on for future notifications, and let's get into it, guys. You know uh based on what we do as MMC footprint traders, right? The whole context of the strategy is actually based up on three major things, right? Which I always speak about over and over again, right? Which are structure, right? S&D and confirmation, right? So these are, this is the whole root of the MMC footprint strategy, right? The structure, S&D, and confirmation. Now, the actual fun part is on how we marry these things together to give us an exclusive and a very deadly strategy. Like that absolutely kills it when we approach the forex charts. Now, it's as usual, guys. Before we do anything, before we jump into trades, we need to see all these three things being applied for us to take our entries with uh with full confidence that this is actually going to be a fantastic trade, right? So in any case, in any market, this everything here, it applies, right? Because like in any market you'll have structure, in any market you'll have S&D zones, and in any market you will have the confirmation part as well. Now all we need to see, right, all we need to see is the following things, right? So this is how we we interpret and how we marry these three things together for them to be exclusive as they are when applied via the MMC footprint strategy. Now, in a case, like for example, a bullish market, right? We, like in a bullish market, we'll definitely have something that's going like this, right? So this is just like the actual, this is a picture perfect chart, which is not realistic, right? It's just an example education for for learning purpose, right? This is educational based examples. However, we will interpret these on the actual charts and how the real markets move, right? So based on this sense, right, so this is how we're taught through the picture perfect examples, through textbook entries as they're called, right? So we have a bullish market that's pushing bullish like this, right? Constantly creating higher highs and higher lows, right? As marked above, right? Constantly creating high highs and high lows. However, all we need to see, right, is in terms of structure, is that break of structure, right? Because okay, so back I had a call. So as we were saying, guys, right, all we need to see is a break of structure, right? Because a break of structure is what tells us that this structural impulse is valid, right? So we need to see this structural high being taken out, right, from this low, meaning that a new high is now being what created. And after the creation of this new high, then, right, only then we can now conclude that our structural impulse is what is valid. Hence, we can now go back and search for the next thing, which is a valid S&D zone. Lo and behold, an S&D zone can be anywhere. It can literally be up here, in the middle, or all the way down here, right? It can be anywhere, right? So just like as I said, for learning purposes, right? So you will have an S&D zone being drawn to you like that. And once you have spotted that S&D zone, which is characterized by inefficiencies, right? So first it has to be the S&D zone, right? So, like when describing S&D zones, right? Firstly, it has to be unmitigated, right? And when you're talking about mitigation, is that the actual, the fulfillment of candles, right? So let's say you have candle one, and from here you have candle two, and from here you have candle three, right? Okay, so just like that, right? So from the distance, I mean, like the gap from this close to this open, right? This gap in between here, right? This is the unmitigated part of price, right? So this SND zone, for it to be very valid and very strong, first it needs to be unmitigated, right? Meaning that there is no price action that came back and touched it before leaving. Second, it needs to have price gaps, right? Price gaps which are also imbalances with either below it or above it in the case of, below it for a supply zone or above it for a demand zone. And the third thing is that it needs to have, that um, that momentum that caused the break of structure, right? So if this S&D zone right here, right, caused an impulse that, did that and broke structure, then this is very valid for price to go back, mitigate it, and after that mitigation, to go further away from there or continue with the trend. So once now you have that S&D zone, and like this is just a highlighted version of S&D zones. If you want to learn more about S&D zones, then you should go back to the MMC footprint playlist, and from there work your way up through the supply and demand videos in their respective order, right? So from there you can fully understand what S&D zones are, how they're used, and how to spot them, and like refinement and etc. So let's go back and return to um our subject, right? So from here you will have this S&D zone, right, that does require mitigation. Hence, from this high, price will make a pullback on its way down, right? Price will make a pullback in terms of what? Of a downtrend in a lower time frame, right? So if this price, like if price created a high like this from this low, right, and there's your demand zone, right? From here, price will make a pullback before continuing bullish, right? But this pullback will be in form of what? In form of a downtrend when you drop down through time frames, right? Right. So example, if it's a 1 hour pullback, right? So per se, right? So this pullback here is on the one hour time frame, right? Then on the 5 minute, it will look something like this, right? And the 5 minute, the 3 minute, the 1 minute, or even the 15 minute, right? It will look like some sort of downtrend, right? An intermediary downtrend, in which after that mitigation is done, then this price will now shift and return back to its original trend and target the highs as its next liquidity run, right? Now this is where this part here is where the third part steps in, which is the confirmation, right? So uh we're not going in blind, right? We're not taking, as MMC footprint traders, everything we do is based on fact, right? We're not taking trades in faith that price is gonna do this, right? We need to have full facts being put into place, right? We need to have a certain story, and this story should be validated by the price action being put into place for us to be able to take these trades and actually be profitable from these trades, right? With that being said, this is no guarantee that you're never gonna have a losing trade. You will have a losing trade regardless of the facts being used, right? That is forex. That's why not everyone is a trader, right? Now, what I'm saying is that through these facts, you'll have, like you will learn and actually practice to become profitable. How do you become profitable, right? First, you need to minimize your losses. Facts minimize your losses, right? This thing here, this confirmation part here will help you a shit ton to minimize your losses, right? Either removing them or making them very small. You can't actually remove them, right? That's utterly impossible, right? I haven't met any trader that doesn't get losses, right? I mean, losses are I can say that every the part of life, right? It's the life of being a trader, right? But regardless of the losses, right? How are your wins, right? This part here, it changes. This is the special sauce of the MMC footprint strategy. This is what makes the MMC footprint strategy become, a whole new level in this industry, right? So let's get into it and see what's in there. So having this being put into place, right? Having this, okay, so let me actually do that. It won't, okay, no problem. So having this schematic here being put into place, right? So we now have our structural impulse check via this breaker structure, right? Um, price from this low has managed to form what? A new high. So the next thing is what? An S&D zone check, which is what? Our last down move before the up move started, aka the demand zone, right? And from this demand zone now, we can now seek for confirmation once price has made its pullback and price is now within the zone, right? So part number 3, this is what we're checking right now. So let me remove this and make drawings that actually make a lot more sense, right? So let's go a little bit down. So okay, so as I said, right, so from a low to a high, right? So price has done this, right? And now we're having a demand zone, right, which requires mitigation, in which price is gonna make um, a downtrend, an intermediary downtrend to come mitigate this. And once this mitigation is done, price from here will now shift into what? Into uh, into new bullish price action that's actually going to target this high here as its next liquidity run, right? This high here, right? So this is our next liquidity run, NLR, right? So all we need to see, right, from here through the confirmation part is this area here, right? The point of impact where the pullback touches the demand zone, right, which is this area here. Now, as we can see, so as I said, if assuming that it's a 1 hour pullback, right, then in order for you to be able to see this pullback as an intermediary downtrend, you need to drop through timeframes, right? As I said before, you can choose, you can use the 15 minutes, the 5 minute, the 3 minute, the 1 minute, but in this case, I'm just teaching this as a general knowledge, right? When we go back to the MMC footprint strategy itself, back to the MMC footprint community, we do have certain rules, right? To be exact, it's called the rule of 30. So the rule of 30 directs us to into which specific time frame that one should go to seek that confirmation, right? Anyways, that's it's for the premium stuff. And of course, if you do want to join the premium community and get that in-depth level of knowledge way more deeper than we touch here, well, it's actually amazing, right? So in the case of confirmation, I'll be teaching the most basic confirmation criteria that we have. We do have multiple confirmation criteria, but on here, because it's the YouTube, it's the free, I'm only gonna teach one, which is the most common, and leave the complex ones and the most deadly ones to the premium stuff, so that the premium members can enjoy them, right? And of course, if you do want to become a premium member, you could always DM us on Instagram at official green pips fx, and we'll be more than happy to receive you guys as the poster shows. Now let's get back into it, right? So from this area here, all we need to see is that, assuming that this is our demand zone and price is now making its way into here, right? So this was an intermediary downtrend, hence all we need to see is the shift of this downtrend into a bullish trend to confirm that price is no longer pushing bearish, but in turn it's shifting bullish. Hence what we need to see is an actual break of structure. We need to see this structural high being broken, indicating what? That price is no longer making lows, but instead it's making what? Highs, right? And from that we need to and from here now we can start taking our trades. Hence the pullback of this to its S&D zone will be trade number 1. The break of it once again, right, and the pullback will be considered as entry number 2, right? And if possible, you can actually get a third entry through the break of this high and that pullback for the third entry, and then price is gonna keep running and running and running, as I said, targeting this high here as its next liquidity run. So it's basically as simple as that. All you need to see is this shift of price from bullish to bearish, and off you go. Now, having that being said, the confirmation part is now check, right? So this is now a full trade that, like this is now a complete trade that you as an MMC footprint trader can now get into it, and uh, make make a shit ton of money through it, right? So having that being said, let's go now to the actual charts and see a couple of examples from the trades that I myself took, right? So uh for example, right, a quick example. So this is like the GBP JPY, the pound JPY, and this is like the 4 hour. So I had this setup, right? I had this setup since last week, right? So price had broken the structural low, leaving us with what? A high and a low. Hence, our structural impulse is now what? Bearish, right? So structure, check, bearish. All we need to see is what? The next thing, what? Which is supply zone, since it's a downtrend, right? The last up move before the down move started. Lo and behold, this is the last place that price went up before going down. Hence, this was my overall supply zone that, followed every criteria of a supply zone. And, it is where it is. So from that, price made its way back here, did that mitigation. And from here now, we started catching trades, right? So as we say, right, I'm a day trader. Have said this and I'll continue saying this, right? So I don't trade the 4 hour, so I just dropped down to the 15-minute and started to work my way through from here, right? So for example, right, if we're 4 hour traders, right, if we're swing traders in this case, and we have something like this, a higher lower breaker structure and S&D zone, the next thing we're going to look for is what? A confirmation, right? So confirmation in terms of what? As I said before, right? So if we have a low and like a high and a low, right? And then we have this structural impulse pushing like this with this break of structure right here, right? Then we have this S&D zone up here. Then price is gonna make its way here, mitigate, and then continue lower with this low as its next liquidity run. That's how it works, right? So from here, meaning that what? Price is gonna make its way through an intermediary uptrend to here, and once this mitigation is done, this uptrend will now shift to a what? To a downtrend, in which we can catch these entries from these highs, and sell this thing off towards the major low, right? So lo and behold, that's exactly what happened in here, right? So we go back and there we are, right? So price is constantly making lows, high, right? Low, high, right? Low, high. Lo and behold, price comes down, right? Breaks this low, right? So this is what a break of structure to the downside. A pullback, entry number 1 is here, right? Break again, right? Pullback, entry number 2, right? Break again, pullback, entry number 3, right? So you can catch these entries as many as you want, but we are targeting this overall what? This overall low as our next liquidity run. So as a swing trader, you could have easily caught your trade number 1 there, your trade number 2 there, and then you just hold the thing through all this down move here. It's, I don't know, it's like, was about like 500 pips if I'm not mistaken, right? So it's as easy as they come, right? So this is the beauty of the MMC footprint strategy, right? So instead, so let's see how we could have taken this trade, right? So so this was like the break, the S&D there. So that's like after the confirmation, right? The breakout structure and the retest. So this could now be your trade. And of course, we are looking to target the overall low. Boom, right there. So this is a 1 to 24-hour trade, right? And it's still running, right? 22 pips stop loss with 558 pips take profit target. So it's a 1 to 24-hour trade, and it's a swing trade, right? So this is the beauty of MMC footprint strategy. Instead of, like some shitty strategies, which could have actually seen you place a trade there and, gamble all your way through here with a 1 to 12. So this could have been a 1 to 12 through just normal, right? Without confirmation and without nothing. 1 to 12 RR to 1 to 24. So as you can see, right, the MMC footprint strategy allows you to become more profitable. Why? It minimizes your risk, meaning that what? You can now expand your lot size with lesser risk and greater reward, right? So this is the actual beauty of the MMC footprint strategy. Having said that, so that's example number 1 on GJ, and like there's a whole lots of examples, right? So this is a gold trade that I'm in myself today. So from here, right? So we were looking at this, Actually, this is squeezed. My entry is right here, and same shit, right? So price break structure, right? Price break structure in the high time frame. You have your S&D zone there. Price goes, taps your S&D zone, um, comes back, comes back here, right? Breaks the structure low, forms a low, comes back to retest the high. There's your entry, and you're looking to take price down and down and down all the way through the trend. And this is like a what? So this is like my second TP target. I'm targeting somewhere here, like my first. This is my second, and this will be my third, right? And so the overall is like 1 to 16. This is like a 1 to 16 hour trade with like 290 pips deep take profit target with only 17 pips stop loss. So as you can see, guys, it's as beautiful as they come. And having that being said, guys, make sure you like the video, subscribe if you haven't, and of course turn that bell button on for future notifications. And until the next one, guys, stay safe, have a nice trading week, and of course, peace out.